The IRS has revealed 5 new red flags for ERCs, employee retention credits. So if you or your business has applied for one of these credits and you're still waiting to receive them, you want to watch this video. Recently, the IRS has intensified the scrutiny of the ERC, and I feel like every day there's news coming out about the intensity that they are looking at these credits and the filing of these credits. And they've added 5 new red flags. This is in addition to the 7 red flags they released earlier this year, making it a total of 12 red flags. What do these red flags mean? Basically, if your ERC claim has any one of these flags, they're telling you amend it before we find it. Because if we find it, not only are we not paying your ERC, but we're going to charge you for trying to file one. All right, so let's take a step back. What's going on with the ERC? Essentially, the ERC was a lucrative credit that you could achieve if your business shut down and you continued to pay wages. But there were a lot of rules, limitations, minimums that you had to hit. Unfortunately, many promoters, many businesses popped up around that time promoting you to file the claims, to help you file the credits in exchange for a percentage of the credit you were getting for their fee. And they were doing this whether or not you qualified. They might have misled you to believe that you qualified, or they might have disclosed to you that you might not have qualified and you chose to do it anyway. And the IRS caught wind of this, say almost a year ago, where they shut down, put a moratorium on all new credits, and now have scrutinized all credits going forward and some credits that they've previously paid out. So let's jump into these 5 new red flags that they have identified in their compliance sweep. The first warning sign relates to essential businesses and the shutting down of essential businesses. To meet a certain rule here, you had to have been fully shut down by government order, or you had to have had a significant decline in gross receipts. Just because your business had to adjust by wearing masks or changing the hours or sending people to work remotely did not mean or does not mean that you qualified for that, complete shutdown. Unfortunately, promoters here were very lenient to say that their clients did qualify for full shutdown. For some of the people that the IRS has challenged on full shutdown, those taxpayers have not been able to prove how the order or the shutdown impacted their business or whether they were impacted by it at all. And that's what's caused the IRS to create this as a new red flag. If you filed an ERC, you need proof that there was a government mandate to fully shut down your business, and you need proof that your gross receipts dropped. The next red flag is businesses that claimed ERC on wages they paid to family members, like spouses and children's and cousins. When the PPP came out and many people took the PPP and started paying everyone under the sun, in claiming ERC, similar things occurred, and the IRS is finding that many business owners are claiming ERC or claimed ERC on relatives. And speaking of PPP, this leads to the third red flag. You could not claim an ERC on the same period in which you used for PPP forgiveness. There was so much confusion about this during COVID-19, right? This idea that if you get the ERC, you can't also get the PPP. And that wasn't true. You could get both. It's just that the periods that you used each of those funds for had to be different. In other words, you couldn't use PPP funds from April through June and apply that for forgiveness for your PPP funds, and then turn around and also claim the ERC specifically for April through June. That is a no-no. And that is where the IRS is finding that a lot of business owners have double dipped. And the fifth red flag is for business owners that had more than 100 employees in 2019 or more than 500 full-time employees in 2021. For these businesses, there were a lot more special rules that they had to follow, one specifically being that they couldn't claim ERC on an employee that provided services. And what they're finding is that many of these large employers did claim ERC on employees that provided services. Now, before I wrap up this video, since I already have your attention, I'm going to remind you of the 7 other red flags that the IRS came out with earlier this year so that you have the full picture on all 12 red flags related to ERC. And if you're someone that still has an ERC credit outstanding, you want to think about either rescinding, retracting, or amending your ERC claim if one of these red flags applies to you. The first one is claiming for way too many quarters. If you claimed ERC in almost every possible quarter, that's a huge red flag for the IRS to look at your ERC claim to see if it truly is valid, because many businesses started to recover, especially with the use of ERC funds, so they shouldn't have necessarily needed to claim ERC for every quarter. The second is the misinterpreting of the government shutdown order. The third is an incorrect wage calculation. There was limits to how much of each person's wage you could use for the credit, and many people did not calculate that correctly. The fourth is the overstatement of wages. So some people claimed on their ERC that they paid people a lot more than they actually did in order to qualify for more ERC. Number 5, the use of supply chain disruptions as an excuse to claim the ERC. That business disruption doesn't qualify to the extent that you would need in order to say that you were shut down by the government. You would still need to refer back to the gross receipts write-off. So supply chain disruptions aren't enough to say that you were impacted. If any of these issues apply to you, the IRS encourages you to take action immediately. My advice would be to seek the advice of a qualified CPA on what you do next. But if that isn't available to you, here are your options. Number 1, you can do an ERC withdrawal program where you just state before they even process your ERC, please just forget about it. The second would be amending. So if you already received your ERC and know that you shouldn't have, you could decide to amend it before the IRS finds out that you shouldn't have received it. And then the third is a voluntary disclosure. But this is basically where you are able to say, hey, I did do this wrong. Please don't charge me penalties. I'm coming to you to let you know that I messed up. I think the IRS temporarily closed this, but it's expected to be opened up again. So in summary, to wrap up this video, if you have any of these red flags that apply to you or someone you know, share this video so that they're aware. And while you're at it, smash that like button, follow us on YouTube, LinkedIn, Instagram, and Facebook at Accounting to Scale. I am your favorite CPA, Tiffany Gonzalez.